Welcome to this very special show called GST and You. I'm Faye Dsouza. Good evening and thank you for joining us. Indeed, the GST Bill is closer than ever before. The government is pulling out all the stops to ensure the landmark tax reform is passed in this monsoon session. From what we understand, Finance Minister Arun Jaitley once again met top Congress leaders today to drum up support, and by the looks of it, a consensus has been reached. So, what we're analyzing on the show today in this game-changing legislation is the impact on you and me. Now, we're average taxpayers. We pay tax on everything we buy and every service we access, not to mention tax that you pay on every property that you buy. Every time you buy under construction property, you have to pay service tax. Will GST rationalize all of that? And fundamentally, will you be paying more tax or will you be paying less tax? Remember, when you go to a restaurant these days, there's VAT, there's service tax, there's cess on the service tax, there's Swachh Bharat cess, there's Krishi Kalyan cess. What happens to all of that? Does it get rationalized into one GST? And is that really, at the end of the day, more or less than what we're finally paying? To discuss that, we have today Amit Bhagat. He's a partner tax at PwC, and Uday Pimprikar, partner at EY. Gentlemen, thank you so much for joining me on the show. The idea, of course, for people watching at home is we're going to open up the phone lines. So if you're wondering how it's going to affect you, and it doesn't matter how tiny you feel the question is, if you want to ask us about your restaurant bills or the cars that you want to buy, or whether or not your widescreen TV is going to become more expensive, there's a phone line right now opened up. It's going to pop up on your screen. There it is. That's the phone number. Pick up the phone and call us. It'll be our pleasure to answer your questions. Today I'm going to start with you. If I go through the list right now of all of the taxes that GST will replace, central excise duty, additional excise duty, service tax, customs duty, special duty, central service tax, entertainment tax, entry tax, purchase tax, luxury tax, octroi, when we replace all of this with one tax, I want to understand finally, do I pay more or do I pay less? How does it finally work out?
Yeah, that's the moot question, right? Finally. On the goods side, the total quantum of tax that you will end up paying is going to be significantly lesser than what you pay for right now for most products.
For goods and for services, or just for goods right now?
Only for goods.
Okay.
For services, it will be marginally high. Okay. But for goods, the effective tax rate today for most goods, would be around 27 to about 32%.
Right.
And that's going to come down for those kind of goods to about somewhere around 18 to 20% as we see it. And so obviously you're going to pay a little less tax on goods.
If you permit me, I just want to explain this to our audience. So basically, when you buy something that's been manufactured in India and that's moved across state borders, there's an octroi on it and there's an excise duty on it. If you buy something that's been manufactured outside of India, there is an import duty on it. So all of that right now, all of the various taxes that you pay before it finally winds up in your hands, taxes that go to various state governments, is all going to be replaced by one GST, and it'll still, that's a lot cheaper than what it is right now, Uday, from 27 down to 20.
Yeah.
How does that work?
And so today, let's say you buy a general product in India that's manufactured in India, that's liable to a 12.5% excise duty. Then you have a VAT which ranges for standard goods from again 12.5 to 14%. The overall tax rate works out to about 27. Over and above, you're going to, like a product which is consumed in Bombay is liable to an octroi duty, and that duty is about 5.5 to 7%.
Right.
Now, if you kind of add up all of that, you're paying a fairly decent amount of tax, and that all of these taxes are getting subsumed into this one tax called GST. For most products, it would be around, the rate of tax would be around either 12% or 18%. Okay. And so that's the reduction, and that's
all right. So anything that I buy, any goods that I buy right now will actually become cheaper. So everything from a bar of soap to anything that you buy when you go out shopping will be cheaper because the taxes come down. But there's another side to it. It's goods and services tax. And Amit, if we talk about, and I keep going back to this because I know there are so many consumers right now who are complaining about it, restaurant bills that get bumped up a massive amount because there's service tax, there's VAT, there's Krishi Kalyan, there's Swachh Bharat, there's education cess, all of that gets added up and people just generally feel like they're paying a lot of money. Will GST make that better or worse?
That's a question on which we can't have a kind of final view right now, because all the services and these consumptions that you mentioned today have a very low a concessional rate of tax. Why? Because there are abatements both under VAT and service tax. So effectively, you pay somewhere around 5 or 6% on all these consumptions. Now, what will happen in GST is a question mark. GST, speaking about it, is naturally not aligned to exemptions. So, which means that we don't really know if these concessional rates that these consumptions suffer today would be continued. If not, then absolutely these services would be steeply higher in terms of the ultimate cost. For example, you mentioned housing, you mentioned restaurant. So all these suffer, let's say, 5-6% of tax, VAT and service tax. Now, if that goes up from that range to a 18% service tax or GST, then absolutely there's a huge jump. Now, therefore, I suppose these things would be considered by the government, that it wouldn't be really acceptable.
So there will be something called a concessional rate, if I'm not mistaken. Uday, tell us about this concessional rate.
I would think so.
Yeah, because there are some things, of course, like homes.
So what happens
when you tax alcohol, we say we're taxing homes. Homes are something we all have to buy. The government has to make it easier for us to buy homes.
Absolutely.
So explain to us how the concessional rate will work, Uday.
So even today, when you're buying a house which is going to get constructed, there is a kind of a VAT applicable on that, and materials that go into that house and services that go into the construction is also liable to a service tax and excise duties, right? What's not liable to tax today is the land, the underlying land, okay? One would think that even under GST, all of these taxes would get subsumed within GST, which is the excise and service taxes, which will get subsumed within GST. What one would expect from the government is 2-3 things. One is that give some kind of concessional rates where especially that that particular property that is getting constructed is getting constructed for residents or and not for commercial purposes. Right. So distinguish between these two. The second is that not to include the value of land in the valuation that you impose a tax on, and so therefore give some kind of an abatement, as is applicable even today, okay, for imposing that GST, and that particular abatement would be 50-60% of the overall rate. So the effective tax rate would then come down to a reasonable rate, about 5-6-7%.
Which is close to where it is right now. In any case. Anup Jairath, I believe, is on the phone line from Noida with a question for us. Anup, go ahead.
Yeah, I want to ask this panelist, how is it going to affect the corporates? How is it going to affect the manufacturers? How is it going to affect the established players like Pidilite, Havells, Asian Paints, vis-a-vis the small operators? How is it going to affect these companies?
Okay, so I'm assuming that you're asking from an investor's point of view, Anup. Are you investing in the stocks of these companies? Why are you interested?
Every man is an investor, whether he's a common man or something. So he's going to invest somewhere.
Okay, all right, fair enough. So Anup is a stocks investor who wants to know how it's going to affect the large companies. How will goods and services tax affect the bottom line of these companies? Amit, do you want to take a stab at that?
See, we must be mindful of the fact that GST will not change things overnight. Of course, like Uday mentioned, on the manufacturing side, there would be a lot of cost efficiencies which would come about for two reasons. One is the lowering of the tax rate, the removal of the cascading effect of taxes, which forms cost in the ultimate chain. And thirdly, there would be ancillary activities which these manufacturing entities take as an input. For example, services, various types of services, for example, transportation of goods. Now, because of the removal of state barriers, transportation of goods would be much smoother. For instance, trucks take 12 days to travel today from one destination to another in India, because and half of it or one third of it is actually idle time. They're stopped at checkposts. Now all these efficiencies ultimately would roll into reduction in the cost of products. So manufacturing, yes, there will be reduction
so
of
a very
cost.
specific question. So
how
an industry,
soon
for
will the
example, like
manufacturers-
automobile. So there's an automobile manufacturing hub in Maharashtra around the Pune area. A lot of the parts for that industry come from North Karnataka and the Belgaum area. It crosses a state border. There's taxes involved in all of that crossing. Will that become more efficient? So will anybody who manufactures automobiles in this country become more efficient as a result? Is that what you're saying? Just to give an example to
Absolutely,
the viewers who are watching.
not only. Yeah, absolutely. Not only automobile, any industry, even not only on the procurement side, even on the delivery side. If your cost of transportation reduces, it brings down the ultimate cost of the product.
All right. So in a
Apart
more
from
efficient
that,
system.
like I said,
Yes, so a more efficient system will obviously lead
yes, of
to
course,
more efficient
more
functioning
efficient
for
system.
most corporates.
But
yes, go ahead.
But the point to note here is that I don't think that the corporates would immediately pass on that benefit to the consumers, because in the initial period, one wouldn't really know what is the net impact and where it's going and how much to pass on. So we'll have to wait and watch. Maybe it will take some time before these kind of benefits or a reduction in costs would be passed on to the consumer. So what I'm saying is that we should not expect an immediate reduction in cost of goods and services. But in the medium to long run, of course, it will bring down the cost substantially.
Right, medium to long run, it will bring down the
to
cost
answer
substantially. I just want to take one more call. Umang Kumar is on the phone line from Calcutta. Umang, go ahead.
Yeah, good evening, everyone. This is Umang from Calcutta. Actually, what I would like to ask is, presently most of the banking and financial services are exposed to service tax, which is at around 15%. However, when the GST is expected to be in vogue, it would be around 18 to 20% in the financial services sector at least. So how it will affect a change in which the government, which is wherein trying to reduce the black economy, and the tax will increase from 15% to say 18 to 20%. And the other thing that is making the entire thing cumbersome is that financial service providers would be required to adhere to compliances across multiple states, wherein presently they are only under one regime, which is centralized registration. So I don't know how it will make the entire thing easy for the commuters.
That's a fair point, and this is something that's been argued for a very long time. Uday, when we talk about BFSI, insurance policies, for example, the fact that there is a service tax on insurance policies that gets passed on one way or another to the consumer, adding about an 18% GST on these financial services that everybody should be buying, everybody should be investing in, is going to make them even more unattractive, isn't it?
So, okay, two things, and I have a slightly contrarian view on this,
of course.
And bear with me for that. One is that on the financial services, at a generic level, whether it will have an impact on legitimizing the economy and so on and so forth,
right.
To my mind, this tax is on the services side. It's not a tax on income in general. So whatever fees you're paying today 15%, you will end up paying another 3 or 4% on that. Okay. So at a basic level, you're right. I mean, there would be a marginal increase in the amount that you pay for the services that you receive. The second is that whether it will have an impact on legitimizing, to my mind, I mean, shouldn't have a major impact because it's not a tax on income or a profit or whatever it is. The second is that is it going to be more complicated for banks to go ahead and assess themselves and do the compliances? And why only banks? For services in general and pan-India service providers like financial services, telecom, then maybe entertainment, these kind of pan-India services, whether it's going to be more complicated? Definitely so. Okay, there's no doubt about it.
What impact will that have on the business for banks?
So again, I think there are two legs to it. One is on the compliances front, they will need to get their act in order. And if they get their act in order, would it really impact their overall activity in a negative manner to a great extent? I wouldn't think so, only because of this.
Okay. All right,
it shouldn't be.
fair enough. Let's take a couple more phone calls. And for those of our viewers who've just tuned in, of course, we know that the government is pushing GST really hard. It's at its final leg. Everybody's got their eyes on Delhi right now. We might actually see this happen by the end of the week. It's a big deal, especially for you and me as average, citizens who pay taxes, who buy goods, who avail of services. This will make a massive difference in the way we pay our taxes. Lakshmi Narayan is on the phone line from Noida, but if you have a question for us, feel free to call us. Our phone number is at the bottom of your screen. Lakshmi, go ahead. What's your question?
See, as I understand, the GST, once it is implemented, will reduce the taxes or reduce the prices the goods sold from the organized sectors, maybe something like an electronic item or something like that. So naturally, this will result in increased buying power of the customers. So will it not have a inflationary effect on non-taxed items, something like vegetables, etc., in the short run?
All right, so more money in the hands of the average buyer. Will that have an inflationary effect on non-tax items like vegetables and fruits, food products? It's a very, very good question. Amit, what would you say?
Yeah, that's a difficult question. I think you need an economist for that, not a tax person. But yes, I'll attempt to answer that. Consumption and particularly food items are not really dependent upon, as I believe, on how much disposable income you have. And particularly when you talk about the basic produce like grains or vegetables, so those would anyways remain outside of GST. We assume so they'll be nil rated. So I don't really think that a reduction in cost of goods would give so much disposable income that it increases consumption to an extent that that will lead to inflation. I really don't know. I'm not an expert on this, but I don't believe that merely reduction in cost would.
What about the argument that GST will automatically increase GDP of the country? It will actually, free up, like you said, from inefficiencies. There will just be a more efficient system. Will that over a period of time have some sort of impact on inflation as well?
In fact, that should reduce inflation. When the productivity increases, which means the debts would increase, export would rise, there would be more economic activity. So states would get more revenue, and particularly the consuming states would get more revenues. So all this would have a churning economic effect, which will only be positive. And that's what the objective of this single national tax is. And the related efficiencies that it brings in terms of compliance, in terms of increasing the tax base. So I think it would have a positive effect.
It will have a positive effect on the entire system. A more efficient system will have a more efficient economy. Subramaniam is on the phone line from Chennai. We're getting calls from all across the country. If you have a question for us, our phone number is going to pop up in just a second. There it is. Pick up the phone and call us. Subramaniam, go ahead.
Yeah, thank you for picking up the call. I appreciate it. I know GST is a very good thing for India, but the question is two parts. One, whether the manufacturer is going to willing to pass on the benefits to the consumer at the end of the day, or he is going to make more money to the bottom line. For example, if the cost of the product is X and the taxes all put together is going to be Y. And if it is going to be replaced by GST, which is going to be Y minus 10%, whether the 10% is, most of it is going to come to the hands of the consumer, or 7% goes to the bottom line of the company and only 3% gets into that. That is my question number one. The second question is, transportation, everybody says is going to be very good and prices is going to come down. And on the other hand, transport is considered to be a service sector, and so on the services sector, the GST is expected to move up in cost. So how it is going to pan out? Thank you very much.
Well, thank you for those questions. Uday, I'll come to you with the first one. Obviously, there's no compulsion for anybody to pass on any benefit that they're getting on tax right now. But would you say market forces over a period of time will sort of even those things out?
Absolutely, I would think so. I think the basic objective of a tax reform is to remove cascading impact in that overall economy. GST clearly is the right step in the right direction. Okay, it definitely reduces the cascading impact.
Sure.
Now, with the reduction in the cascading impact and the reduction in the tax, how much that benefit gets passed on is a matter to be determined based on demand and supply. Okay, and maybe if it's a perfect market, then all of it will get passed on. If it is not a perfect market and it's a seller's market, lesser so. So to that extent, I think that will work out. But
that will work out. And his question about transportation?
So transportation at a very basic level, even if the rate of tax increases, transportation generally is a B2B service.
Right.
And even if tomorrow a 25% tax is imposed on transportation, if the recipient is going to be able to get a set-off of that particular tax, it doesn't really matter. Today, the service tax that is imposed on transportation, okay, or freight activity in general, is not available to be set off when it is received in the distribution chain or trading chain. To that extent, if tomorrow that particular set off is available, in fact, the landed cost of this particular service is going to come down, even though the rate of tax is increasing. So, when people say that a transportation price only on account of tax is going to come down, I think they got it right. The second is the clear efficiency in logistics. Okay, if the GST is of course implemented appropriately and check posts are removed, the amount of time that a truck takes to move from, let's say, one location in the country to the other significantly reduces. You are able to kind of eke out more juice from the system. Right. From the asset, and therefore the cost should reduce. So in both
everything, so great. So everything becomes more efficient. The system becomes tighter, and a more efficient system is a system that benefits everybody. I have a quick question from Twitter. Utsav Chaudhary has written in. He says, "How will GST increase monthly household savings, if at all? What impact will it have on retail investments?" I want to ask Amit this question. Amit, also, if you could give our viewers a sort of timeline. Let's assume that GST is actually, like everybody's expecting, it clears the Rajya Sabha by the end of the week. How long before we actually see it implemented, and how long before it changes our lives? And in that case, like he's asking, like Utsav is asking on Twitter, will it impact household savings?
Again, see, if your cost of consumption reduces, you have that extra bit to save. So that's the very simplistic answer. Insofar as when GST is going to be implemented, as we look at it now, there are various steps to be taken on the legislative front, on the administrative front, and also on the implementation front. So as we, so probably on Wednesday, the bill would be presented, and assuming it gets passed sometime during this session, then at least it would require, let's say, 5 to 6 months for the government to, and there are various technicalities involved in between. This is just the constitutional amendment bill. Thereafter, the GST law has to be framed, the states have to pass their laws, and there are various other technical steps in between. So all this, if we take maybe by December, January, we will be probably ready with the legislation, with the IT infrastructure, with the administrative setup being in place. But the industry also needs time to really react to this and prepare itself for this great transition. Now, how much time the government gives for that is a question mark. But overall, a fair period would be 1 year. So as we stand, we are into July. Also, a more realistic date could be June or July next year rather than 1st April. But I wouldn't be surprised that if it's implemented on 1st April, because in the background, the work is happening on all fronts, be it administrative, legislative, or the IT infrastructure.
We only have a couple of minutes left, and I want to quickly listen to the two people who have called in. Anup Gupta has also called in. Anup, go ahead.
Good evening, everybody.
Good evening.
I am calling from Bombay.
Yes.
I would like. Good evening, everybody. I am calling from Bombay. I would like to know, as central excise is subsumed in GST, will the state VAT and CST will be subsumed in the set-off, and all the credit, all the GST what we pay, will we able to get the set-off of that?
Okay. All right. One more question comes in from Sridhar in Chennai. Sridhar, go ahead.
Yeah, good evening. I am from Chennai, Sridhar.
Yes.
And the end of the day, we are seeing the, what you call, GST as a very serious discussion I could see in your program now.
Yes.
One. And so far we have been paying in goods. I am understanding that 37 to 40% we are paying. Let's assume that if I am being cut in 20 to 25%, am I equipped enough to handle that type of a reduction? In the sense, my worry is, will it be a capital loss? Reason, if you cannot handle it properly, less amount, that itself, you will have to understand that you may have to lose your capital. Because we are, to govern us, we are paying the money. Assume so far, whoever governed us, efficiently they have done it. For that, they have charged us 40%, let us assume. If you reduce it, how it is going to be? Are we really serious about whether the mechanism it is educated for that? Down the line, grassroots level, have we understood what we are doing?
That's a great question. Let's take the first one. First, Uday, VAT, CST on the state level, will that be subsumed by GST? How will it impact the regular taxpayer?
So, okay, post GST implementation, whichever that is, okay, there is no concept like an excise duty. There is neither a concept of VAT or CST that's applicable. All of these taxes are now subsumed in GST. Whatever GST that gets charged to you for raw materials, for your manufacture, both at the CGST or the central GST and the state GST level, should be available as a set-off against your output GST. There's some minor exclusions, which of course would be there. Our laws will never be really, really simple. But by and large, the quantum of set-off that you have or the credits that you have is likely to increase materially through the supply chain. Yeah.
All right. And of course, the other question of the capital loss and how will this impact the people who govern our states? Amit, there is of course a capital loss that has been very carefully calculated by every state that will need to be compensated by the central government. But will this in any way impact the functioning of the states? Will there be a hiccup period or an uncomfortable period before things are ironed out?
See, of course, any such great transformation will have its own teething problems. And we do not know how many of the states are not really equipped with the IT infrastructure or the administrative setup. So we'll have to watch how they get ready for this administration. But insofar as the compensation is concerned, there is a constitutional guarantee for the next 5 years that whatever the states lose on account of GST, and these would naturally be the more industrialized states today because it's a source-based tax today, moving from source-based to consumption-based, the revenue-based shifts to the consuming states. So that guarantee is there in the constitution, enshrined. So states need not really worry about that.
So there are a couple of things there. One
and just to add
sorry.
Yeah, no, go ahead, Uday.
Yeah. So
sorry, Uday, go on.
Yeah. So at a very basic level, the overall revenue that is exposed to GST for states is not more than about 25% of the total revenue of the states put together.
Sure.
So the risk that they are really carrying is not as much as people perceive it to be. That's one. The second is that there is going to be a reduction in the rate. But if you look at the revenue neutral rate recommendations and that particular report which was issued by the chief economic advisor, it assumes that once a GST happens and the kind of implementation and the way they are proposing to implement, the quantum of compliance is expected to significantly increase. In fact, the report assumes 30% increase in compensation. And
better compliance will, again, we're coming back to the same thing, will be a more efficient system which benefits everybody. So basically, fundamentally, GST will be a more efficient system, and as citizens and taxpayers, it's something that we will benefit from. I have to wrap up the show. Thank both of the gentlemen for being on the panel with me. Conversation continues about GST here on ET Now. Stay with us.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.